Hi guys, let's continue our Forex technical analysis for swing trading. Okay, let's start with the USD index chart and market fake it out here nicely, and which we called accurately, and since then the market has returned into original trend and market consistently behaving below the blue moving average line, which means USD is getting weak overall and we're gonna look for opportunities to sell USD. Okay, let's write it down. Today is March 5th. USD index has downtrend and we're gonna look for opportunities to sell USD. Okay, USD Japan Yen. So here again the market is behaving consistently below the blue moving average line. Trend is down. In other words, USD is getting weaker against Japan Yen, right? So down leg retracement, down leg retracement. Now we have the really nice down leg like this. Size of this last down leg is just very nice, and currently market seems to be retracing, and if the market keeps retracing into 50 to 60% zone, that will be perfect opportunity to sell USD Japan Yen. If that is the case, I'm gonna set my stop loss above the local maximum here, and I'm gonna set my take profit at the Fibonacci extension 1.618 down here, and your risk and reward ratio would be about 1 to 3. Okay, let's write it down. USD Japan Yen trend is down, which is compatible with the USD index story. Leg size is nice, and our decision is to wait at least the 50% retracement. USD Canada Dollar Loonie. So here we have the market behaving consistently above the blue moving average line, which means the trend is up. In other words, USD is getting stronger against Canada dollar, right? But unfortunately, this story conflicts with the USD index chart, and that's why we're not gonna force any trade. So let's write it down. Loonie trend is up, which conflicts with the USD index story, and that's why we're not gonna touch USD Canada Dollar Loonie. Okay, USD Schweizer franc. So here we have down leg retracement, down leg retracement, and so we have the latest down leg goes like this. So the size of this leg is just very nice, and market right now seems to be retracing. If the market retraces at least the 50 to 60% zone here, then I would recommend selling USD Schweizer franc. Set your stop loss above the local maximum here. Set your take profit at Fibonacci extension 1.618 down here. Your risk and reward ratio would be about 1 to 3. So let's write it down. USD Schweizer franc trend is down, leg size is very nice, and our decision is to wait 50% retracement. Okay, pound USD. So here we have original positions opened at this price level. Since then, market is behaving nicely, forming new legs. For example, up leg retracement, up leg retracement, and we always want to close profit at some kind of Fibonacci extension, right? So based on this last leg, my profit target is the Fibonacci level 1.618 up here. So right now the market has returned into original trend nicely, and it should soon hit the take profit on the pound USD. So, and as a trader, my job is to let the profit run and close the losses earlier. So let's write it down. Pound USD trend is up. Current leg size is nice, and decision is to let the profit accumulate, let it hit take profit Fibonacci extension 1.618 down here. And I have already updated my stop loss into new local minimum here. Even if the market goes down and hits the stop loss, I will still end up with some profit. Okay, so that is the pound USD, and let's take a look at Euro USD. So here we have, according to my system, Euro USD is still doing this sideways action because a lot of candles here up, market really didn't go up, didn't go down, a lot of candles up, and still a lot of candles behaving up. If the market continuously behaves above the blue moving average line until this timeline, then we will have enough confirmation that Euro USD trend is up. So at this point, Euro USD is still doing sideways according to my system. That's why we're not gonna touch Euro USD. Okay, Aussie. So here we have the market consistently behaved below blue moving average line. So at this point, trend is considered down, and since then market has retraces, currently faking out, and trend is still considered down, which is unfortunately conflicts with the USD index story, and that's why we're not gonna touch Aussie. Aussie trend is down. In other words, USD is getting stronger against Australian dollar, right? And which conflicts with the USD index chart, and that's why we're not gonna touch Aussie. Conflicting story. Okay, New Zealand dollar USD, again the same story. So market was doing this sideways action until this price point, then market went down and continuously behaved below the blue moving average line, right? And since then market is doing the fake up with the 4 or 5 candles up here, and at this point market is still considered behaving below the blue moving average line with the fake out. Trend is still considered down. Okay, let's write it down. So New Zealand dollar USD trend is down. USD is getting stronger against New Zealand dollar USD, which conflicts with the USD index chart. That's why we're not gonna force any trade on New Zealand dollar USD. Okay, so what do we see overall last several days? So USD has been weak last few weeks. It faked out a little bit, 5 or 6 candles a few days ago. So as you guys can see here, which we called out accurately, and since then market has returned nicely into original trend. So right now my best decision is to let the profit run on the pound USD. Let it take profit. Also, I'm closely watching USD Japan Yen and USD Schweizer franc. If they retrace nicely into at least the 50% zone, that would be perfect opportunity to sell USD Japan Yen and USD Schweizer franc. Alright guys, thank you guys for watching. See you next time.